as a law firm. I have a legal practice, but my primary role, my day-to-day is real estate closings and transactions and just real estate law in general. And so one of the things that I get to do every day is close deals. And we got to see Amanda this morning at the closing table and close one of her buyers. And so that's always a good day. But what I want to go through with you today is just some training on the ALTA settlement statement. For those of you that have had closings, you know what the ALTA settlement statement is, but it is a statement that has all of the costs and credits for a real estate transaction. And so we're going to go through, and there's 10 sections within this statement, and it's all made up, and it basically boils down what you do with your client. Everything boils down into these 2 or 3 pages as far as all of the numbers go. And so I want to be able to kind of walk you through and tell you how we get to those numbers, and be able to, so that if your client has questions, you can know how to look at one, know how to read one, and that sort of thing. The first thing that I think is helpful, though, before we get looking at each section of the settlement statement, is to kind of give you an overview. And I think it's easy to look at it from a bird's eye view before we get into sort of the finer details. But when you are representing a buyer, and that buyer is financing a transaction with a mortgage or a lender, the buyer's title company is going to be the title company that works with the buyer's lender to do what we call balance the CD. So I don't know all of you as far as your backgrounds and everything, but if you've ever been a real estate agent in another state, or if you ever lived in another state or closed on a house in another state, it may have been different than the way we do things in Tennessee. A lot of times in Tennessee, we have what I call a split closing, where the buyer has one title company and the seller has their own title company. Sometimes the buyer and the seller close at the same title company, and we like those. But most of the time, I'd say 75%, 80% of the time, the buyer has their own title company and the seller has their own title company. The client has, and the reason for that is the client has the right to choose their title company. In reality, most clients don't know anything about title companies. And so the real estate agent usually chooses the title company or suggests the title company. And you write that into the contract. And so because the real estate agents are often the ones choosing that, most real estate agents have a partnership, have a relationship with the title company they're comfortable with. And that's why we end up having what I call split closings. So when you are going through a transaction, depending on which side you are representing, whether it's the buyer or the seller, your title company may or may not be the title company that is drafting the settlement statement. If it is a traditional transaction where the buyer is getting a mortgage, it will be the buyer's title company that is making the settlement statement. So if you're representing a seller, in most likelihood, the seller's title company is going to be waiting on the buyer's title company to get them the settlement statement. And then we have to review it, approve it, make sure that they got everything on there correctly. And then we will send it over to either the transaction coordinator or to you for you all to review prior to closing. Sometimes that happens 2 or 3 days in advance. Amanda can tell you, I think we got one this morning at 8 o'clock for an 8 o'clock closing. And that was because it was a VA loan, and we got the loan documents last night around 8 or 9 o'clock, and my staff had gone home for the day. So, and it was an 8 o'clock closing this morning. That's just the real estate market right now. Every lender is really, really backed up, if you all have not perceived that. So, so because of that, we are often waiting till the very last second to get these things done, because we have to wait on the lender or we have to wait on the other title company. Once the CD, or I call it the CD, the closing disclosure, and that's the lender document. You're going to hear these terms floated around, but the closing disclosure is the lender document that has all of the costs, credits, and details of the transaction. Once that is balanced with the title company, meaning they have gotten all of the title company numbers, like our title insurance premium, closing fees, transfer tax, real estate tax, all of that stuff the lender doesn't deal with. They get that from the title company. So once they have balanced with us, then we will have what's called a final ALTA, A-L-T-A. You may hear older real estate agents who have been in the business for a long time refer to that as a HUD, H-U-D, or a HUD-1. We don't have HUD-1s anymore on unless it's a cash deal or a commercial deal. So on residential stuff with With mortgage, we only have the ALTA. All of it's the same thing. It's just another word for settlement statement. And so the ALTA settlement statement is what the title company will then send to you or send to Kara to review, to make sure that we have everything on there correctly. You're going to want to review that prior to closing, because maybe you dropped your commission for some reason from 3% to 2.5%. And maybe my processor missed that. Or maybe you have a fee that was supposed to get on there. Maybe there was a home warranty that was supposed to be paid by the other side and we missed it. Maybe there was a counter offer 3 that said they'd pay $1,000 towards closing costs and it just didn't get on there. That's where you're going to want to review that ALTA settlement statement to make sure that it matches up with the deal that you have for your client. And so we'll send that out as soon as it is balanced, and as soon as we have a final. And then if you have any changes, please send it back to us and say, hey, please add this, or hey, this is wrong, or hey, can you do this because it's supposed to be on there. And then we'll go back through and we'll get it changed and revised prior to closing. That way the client, when at the closing table, is seeing the final perfected settlement statement. And so that's the way it works. It's not always pretty, because like I said, we are in a waiting game. We're usually waiting on another title company or a lender to get it. And once we have it, we send it out. But that's sort of the way that works. So I will sometimes refer to ALTA and CD interchangeably. It's because they have the same numbers. The closing disclosure can only be sent to your buyer. They can't send that to you as the agent, whereas I can send the ALTA to you as the agent. The ALTA also has the seller figures on it, whereas the closing disclosure just has the buyer figures on it. The closing disclosure is something that when you are representing a buyer, you're going to want to make sure that if the lender sends them a closing disclosure 3 business days prior to closing, your buyer, both of your buyers, if it's 2, they have to acknowledge the CD. And it's usually a DocuSign click, but you want to make sure they do that, or else it could delay the closing. And so I like to make sure everybody knows and understands that before we get going as well. Before we start, does anybody have any quick questions just on the overview? And I know I went through that quickly, but that's just sort of the way we do things from title company to lender. Anybody have any questions so far? Okay. We're going to start in on the settlement statement here. I have
one quick question. I'm so sorry.
Sure.
I should have said
No
that.
problem.
Is there any benefit? Like, sometimes like on the buyer side, they request that you both use a certain title company. What is the benefit of that? Like, what is that doing for anybody?
So I would be wary of doing that. My company, and I say that, and it's sort of two-faced, because my company, we do offer a discount if we have both sides of the transaction. So for instance, Bell and Alexander, if we close the buyer side and the seller side together, we charge $250 as a closing fee as opposed to the normal $495. So it's about a $250 savings. So that is something that my company does. And the reason that we do it, I mean, I'm going to be completely honest with all of you and completely upfront. The title companies split the title insurance premium. And so if your title insurance premium is $1,000 and there's 2 title companies involved, then my company only makes $500. The other company only makes $500. So if my company has both sides of the transaction, it's a little bit more work for my company, but we get the entire $1,000 premium. So we're able to discount our closing fee. The other reason is it also allows us to be introduced to other real estate agents. And if we do a good job, we might get their business in the future. Here's where I'd be careful, though, as a real estate agent, using another title company that you're not familiar with. Not all title companies are created equal, and they're not the same. And you want to be very careful with who you use for lending, and you want to be very careful who you use for title. Those are, I think everything that you connect your buyer with or your seller with is important, but those are the 2 biggies. Not all title companies have attorneys that can help you through a difficult transaction. Not all title companies will have attorneys at the closing table with you, and not all title companies will be able to get things resolved quickly for you if there is an issue that comes up. And a lot of times you all don't even know when there's issues that comes up, because we just clear them and we fix them, and we get rid of liens, and we do indemnification. There's all different types of ways that we clear title that's messed up. so if you ever become aware of a title issue that's messed up on one of your files, it's because it's pretty bad, and we're going to have to get you involved to get the client involved to get something fixed. But there's a lot of stuff that gets fixed every single day that you won't even know about on the title side before we get to closing. And if you're working with a title company that you're unfamiliar with, that you don't have a relationship with, that you don't have their cell phone number, et cetera, it's just not a great idea. Sometimes you might save some money. I still don't think it's a great idea to use a title company that you're not familiar with. Instead, well, that's just all I'll say on that. But I think there's really no advantage other than if you are doing a what I call a domino, where you have your client is buying and selling on the same day. You'll want to schedule early in the day, and if everybody's using the same title company, there's less documents going back and forth from company to company, so it can sometimes fund faster. But if I were advising you, I'd say try to get them to use us, and then we can do it all, and both sides will save $250. So that would be my suggestion there. And so yeah, but that's a really good question because I get that one a lot.
Can I add something to that?
Sure.
I think you're definitely right. Like, not all title companies are the same, because I think there was like 2 transactions, and Kara, correct me if I'm wrong. And the other title company was like, we're going to have to push back closing because we're not going to be able to do this because there's title issues, or we're not going to be able to get the CO in time, or and I was like, reach out to Bell and Alexander and see. And they were like, no, we can get this done. So basically the other title companies on both transactions were like, we're not gonna be able to get this done in time. And it just wasn't the truth. They just didn't know or have the knowledge to be able to say, yeah, we can do this and get past this and be able to close in time. So I think it'll, like, having Bell and Alexander and the knowledge they have and using them is very important to help us get these deals to closing. So it makes our clients happy. So I think that's really important.
Well, and part of the reason for that, Aaron, is the underwriting process. So, lenders have an underwriting process, and it's like a bad word to say underwriting when you've got a buyer. But we have it too on the title side. And so I own a title agency. We have an underwriter. Pretty much all the title companies do. The difference is some title companies like mine, we've been around for so long, and we've, 2 decades, and they trust us. And so we do a lot of self underwriting within our own firm, and our attorneys can clear things. And that makes it a lot easier. If something comes up, we can just kind of make a call without having to wait on our underwriter, because underwriters like to tell you no because they're risk averse, and title attorneys like myself like to say yes because we like to close deals. So we kind of butt heads sometimes, but that's sort of my suggestion is just get a good relationship with us, and that way we'll try to do. I mean, you're not going to use this for every transaction, we know that, but when you can, I think it helps when you just know the people well that you're dealing with on that side, and same thing with lending as well. But that's a really good question.
If you have the listing side too, I don't think it hurts to see if the buyer's agent will also close with Bell and Alexander, because I think it will make it a cleaner process, and it'll also be cheaper. So if you're negotiating and you're like, you can say, hey, let's save $500 together in the negotiations, and then let's both close with Bell and Alexander, and your client can save $250, we can save $250.
Yeah, I think that's a great point.
Like, you can also have it fund a lot faster too. I had that happen where my sellers were waiting on the buyer's title company. And so next time he was like, can we just all close it, do this at the same one? So that can help too.
Yeah.
I had a buyer's agent just go off our checklist, like we put on the MLS, and she just saw that we use Bell and Alexander. So she just copied and pasted the same information for herself too, because she knew it would be easier and faster and less headaches.
Yeah. That's like what I did for one of mine that I have right now. And now I'm like second guessing it because I wish I wouldn't have. Because it's
okay, and it probably won't be any problem. I'm just saying that problems can arise, and so you just want to be careful. But I mean, the majority of our transactions, it's smooth and it's fine, and there's a lot of good title companies in Middle Tennessee. So, okay, I want to jump right in here. There's 10 sections. We'll try to get through the main ones. The first section, and if you all can see, if you can still see, I'm not sure, but the settlement statement, the first section you're going to see is the financial section. So this is going to be all the common sense stuff. So your sales price is located in this section. The loan amount is located in this section. If the client put down earnest money, that's going to be in this section as well. And then the main thing here for you all is if you are negotiating a seller credit in your contract, it's going to show up in this first section of the ALTA settlement statement. So if you know that it's supposed to be $4,000 of seller credit or whatever, make sure you go here first and make sure that that is accurate. Also, if you've changed the price around a bunch, you might want to make sure that the price is right too, because that's going to affect everything else. And so that's where you want to check that out. And then the second section, we'll skip right ahead because that's pretty much common sense. Second section is going to be prorations and adjustments. I won't get too far in the weeds here, but basically real estate taxes in Tennessee are paid once a year. They're paid at the end of the year. They come out every year. The bill comes out in October for most counties. And so real estate taxes are paid depending on the county in which the property is located. That's who handles the taxes. And so what we do is, like my January closings right now that I'm closing, because the tax bill for 2021 has not come out yet, the buyer will pay all of 2021's taxes, and then the seller gives a credit to the buyer right now for 15 days, and we prorate those taxes based on what we have from last year. So we're assuming that the taxes are going to be the same as 2020, and we prorate them based off of last year. So let's just say the tax bill, I'm not going to use math here, but let's just say it's like $1,000 is the tax bill. So 15 days divided by 365 of $1,000 is not a whole lot. So there's just a few dollars right now going from the seller to the buyer, and then the buyer will pay the full $1,000 tax bill in October, it'll at the end of the year, it comes out in October. Now, the taxes in most of your transactions, when you're representing buyers, if they're getting a mortgage, and I'd say 90 to 95% of the time, if you get a mortgage to buy a house, the taxes will be built into their monthly payments in what we call an escrow account. And so when I say they're going to pay their taxes, they really don't pay their taxes. The lender or the servicer of their loan pays their taxes, but it's built into their monthly payments. And so we prorate taxes. We also prorate HOA. So today's the 15th. So say the HOA is $100, and let's say the seller paid January's HOA, then the seller will then get a credit back from the buyer for $50 because we're right in the middle of the month. And so a $50 credit from the buyer to the seller to pay for the other half of the HOA that the seller paid. So those are the tax prorations. I don't want to get too far into the weeds on this. It's pretty much just you're paying your portion of the time you've owned the property. Anybody have any questions about prorations? Okay. Section number 3, this is the closing costs for the loan. And so this is going to be where they're going to, at the beginning of the process, the buyer is going to get something called a loan estimate, or you might call it a fee sheet from the lender. And it's going to give all of the estimated costs for the transaction. And they're going to put everything on there. They're going to put title, premium, closing costs, all that stuff. They're going to put all of their costs as well on that fee sheet. That's just an estimate because usually the lenders don't know how much the title premium is going to be or how much the closing costs are going to be on the title side, the closing fee is going to be. So they just do kind of an estimate, but they do know their fees. And so when you are examining a loan estimate at the beginning of the process with your buyer, you can see what the lender's fees are going to be because that is their fees. And so anyway, at closing, when we go over the ALTA, that's where their fees go. And so it's usually all the normal stuff. They've got administration fees, MERS, appraisal fees. If the buyer is using points or buying points to buy down their interest rate. And all that is they're paying a premium at closing to get a lower interest rate, which will save them over the life of the loan. Does that make sense? Does anybody have a question about how points work? So just think of it that way. They're paying a little bit extra at closing to get a better interest rate that will save them money if they live in the house for 5-7 years, and their loan officer will help them understand what's a good idea to do as far as paying points. And then the last thing is prepaid interest. So this is where a lot of times people will pay, or a lot of times buyers that may be kind of close on their ratios or close on qualifying, sometimes will want to close at the end of the month, because you'll have less prepaid interest charged on the closing statement if you close at the end of the month. But what that means is, so like, let me backtrack. So if you pay so let's say we close on January 1st, you're going to have quite a bit of prepaid interest, but you won't have a mortgage payment due until March the 1st. Whereas if you close on January 31st, you're going to have less prepaid interest, but your first payment is still going to be March the 1st. So if you close at the beginning of the month, it feels like you're skipping 2 mortgage payments. Whereas if you close at the end of the month, it feels like you're skipping 1 mortgage payment. But if you're close on ratios or close on qualifying for a loan, you have less cash to close if you close at the end of the month, because the prepaid interest is lower. And so what I do when I go through the settlement statement is I'll say, well, today's January 15th. Your prepaid interest is, $274, and you're paying that today. And because of that, you're not going to have a payment due until March the 1st. And 99.9% of the time, the buyers look up at you and they go, oh, good. Because they're just thinking in their mind of all the things that they've got to pay. And the fact that they're not having to pay a mortgage payment until March makes them feel a lot better. So, so that's sort of the way that works. And that's why.
Ben, you cut out. We can't hear you. I can hear you now.
I apologize. Can you hear me?
Yes.
Okay. Sorry. Wi-Fi going in and out. So yeah, so that's the prepaid interest. Any questions about the loan charges of the settlement statement? Okay. Next section is other charges. This is more loan charges. So if they had to do like a flood certification or a credit report that they had to pay for, these are mostly things that the lender fronts money for in order to get the deal to closing, and then the buyer refunds the lender, is in this section here. Section 5, this is one that I like to spend just a second on. This is the impounds. I call this escrow. Most people call it an escrow account. So what we do at closing is we actually collect usually a few months worth of taxes and insurance. And then at the end of, or as part of the monthly payment, the buyer, a part of their payment goes into an escrow account. And then each year the taxes get paid and the homeowner's insurance gets paid out of that escrow account. And so, if your client has a question and they're like, I don't know what this impounds is, why are they charging me these fees here? These aren't fees. This is their money. It's just being put into an account to save up for taxes and insurance. Usually in this section, there's what we call an aggregate adjustment, which is a negative number. And the negative number just means it's a credit, because they can only collect a certain amount in the escrow account. And if they start collecting too much, the law doesn't allow that. So they do an aggregate adjustment to reduce that amount. But they always have a little bit extra in that escrow account, just in case taxes go up or the homeowner's insurance premium changes and goes up. That way they'll have enough money to keep those things paid. So that's sort of how that works. Any questions about escrow accounts for taxes and insurance, and how all that works? And I know we're moving through this quickly, so if you think of something later on, we can circle back. The next section is my section. This is title insurance. So a couple of things here. This is where I get a lot of questions usually. Title insurance is a one-time premium. It's different from homeowners insurance, whereas homeowners insurance, you renew that every year. It's out of the escrow account. Title insurance is a one-time payment. And it's paid at closing, and it covers everybody for as long as the loan is in place or as long as the buyer owns the house. There are 2 types of title insurance policies. Both of them are lumped into title insurance. There's the lender's title policy and the owner's title policy. Okay. And so when you are in your contract, negotiating your contract, and you say seller to pay title or buyer to pay title, that includes both title premiums. All right. The way that it works, and I'm trying to explain this the best way I know how, because federal law, of course, had to make it really confusing. Back in 2015, they changed the law. And when they did, it became more confusing than it already was. But essentially, if you are buying a home and getting a mortgage, your title premiums cost the same amount as if you were just getting an owner's title insurance policy if you were buying it with cash, except there's a $35 addition, and that is for simultaneous issue, which means we're issuing the policies at the same time, the owners and the lenders. So we're not going to charge you for an owner's and a lender's. We're basically just going to charge you for the owners and then add $35 to it. Now, it's confusing to people because it doesn't show up that way. When you look at it, the owner's policy is going to be like $600 and the lender's policy is going to be like, or that's a cheap one. Let's say the owner's policy is like $1,400 and the lender's policy is like 400 and something bucks. So total it's $1,800. Well, you're going to say, well, Ben, I thought you said it was only $35 if they were issued together. It is. What happens is if you were to take away the loan and make it a cash deal, that owner's policy would go up to 18 something, and it would be like $400 more expensive, minus the $35. And so it's just the way we have to disclose things, but just know that by getting both policies together, it's still the same as if they were just getting the one policy. We just add $35 for simultaneously issuing them. I know that's really confusing. You don't have to know all of that. That's what I do. And I didn't explain it the best way probably, but just know a couple of things, because I had an agent this week I went to lunch with, and she said, "Hey, Ben, I think I may have messed up." And I was like, "Great. I don't know if I can help you now, but what'd you do?" And she said, "Well, I'm representing a client, and the client wanted to pay, they didn't want to pay the whole title insurance. I represent the seller in Davidson County, but they only wanted to pay for part of the title policy. So I signed them up to pay the owner's title policy, not the lender's title policy. Did I do that right?" And I said, "Well, no, you didn't." Not if you're trying to save your client the most money. The lender's title policy is actually disclosed as the cheaper policy premium. And so I said, next time, call me. I can help you through that. But I don't really recommend that. Title premiums can be kind of confusing, and everybody kind of looks at it in a weird way. So I just say buyer to pay title or seller to pay title. If you want to get in the weeds and break it up and make it more complicated, give me a call before you sign anything, because we want to make sure you're doing it right. But if you want to say buyer to pay half a title or something like that, then that's, you can do that. But really, I would just keep it all as title and try not to break up the premiums. Closing fees also in this section. That's my company's fee. That's what we get paid for doing the closing. Most title companies are going to range from $450 to $600. There's not a whole lot of difference in these fees typically from title company to title company. Like I said, if we do both sides, we'll drop ours to $250. One question I get from a lot of agents is, do you need to be shopping title companies? Not really. The premiums are going to be the same. The premium is where the is where the bulk of the fees are, and those are recorded with the state of Tennessee. So from title company to title company, it's going to be basically the same stuff. So there's not a whole lot of title premium shopping. The only thing that really differs is the closing fee. But like I said, most companies are somewhere between that $450 and $600. If you get somebody that's like, "Oh, our fee is $225 or something like that," it's usually not. They usually have like $100 attorney review fee, a $50 courier fee, a $75 doc prep fee, and they add all that up and it makes it to like $450 or $500. So just keep that in mind. There's not a whole lot of shopping on fees like you do when shopping lenders. I do encourage people to shop lenders and shop home insurance. You can shop title insurance, but you're just not going to find a lot of savings by doing that. Any questions about section 6? I know this is my section, so I'd love to take any questions that you have about title insurance. Oh, one last thing. We have a title insurance calculator on our website. If you don't know how to use it, don't feel comfortable using it, that's fine. Text me. I'll get you a quote from it. Had an agent last night. I was feeding my baby in one arm, and then the other arm I had my phone getting them a quote and sending them over. I can do a printout that's on our letterhead, and she needed that for an offer because the listing agent was wanting to not just see that they pay title, but to see what the title was going to cost. And they wanted it on title company letterhead, and I was able to do that from my phone and just send it over to her. So just text me if you want something or need something like that on a multiple offer situation. It can be where you need that quickly. So just text me for it, and I'll get that over to you. But if you want to download the app or get on our website to use the calculator, you can. If you want individual training on that, I'm happy to do that. It's a pretty useful calculator, so just let me know.
Hey,
Any
Ben.
questions about that section? Yeah.
Yeah, I have a question. So I have been on your calculator and I've done that. So is that, those are total charges for both sides, buyer and seller, for the entire transaction? Is that what it's showing me?
Well, it's not going to show you everything. It's only going to really show you what my company controls. And so that's our closing fee, title insurance, and then also it shows you the transfer tax that the state charges. But like lender fees, I don't know. Every lender charges different fees, so I don't have that stuff. So what you really kind of have to do, especially if you're preparing a net sheet for a seller, you can use our title company and get most of what you need. The one thing that you're not going to be able to get, because we don't have the tax, but you can get the tax information from the trustee's office if you want to do prorated taxes, but you don't even have to worry about that usually. But the other thing that you're not going to have on there, of course, is the payoff for your seller's mortgage, because I don't know what your seller owes on the house, but you can go and you can at least get your title, and you can get the transfer tax, recording fees, and our closing fee on there as well when you're building a net sheet, or if you're just trying to figure out how much it's going to cost your client if they agree to pay title.
And that's, Heather, in this situation too, like the settlement statement we're looking at, the seller is paying the title for the buyer.
Okay.
And that happens a lot.
A lot. Mm-hmm.
Yeah. It may not happen as much now because we're in such a low inventory market, but there were most of the time Williamson, Davidson County, that's sort of the norm for seller to pay title. But again, we're in a low inventory market, so you may not be experiencing that out in the field right now.
Ben,
that's a really good question. And again,
sorry.
No,
you're fine. I was saying, can you go over the title search stuff too? I got kind of screwed on that one time of like, we had to pay the title search because I didn't specify it.
If I can just pause you guys, because it's 1:08. I know some people may have appointments. If you need to go, you can go, and we'll just wrap up here, maybe 10 minutes, Ben.
Yeah, 10 minutes, that's fine. I'm sorry, I always go long, so that's
okay.
If you all want to talk more, just text me. We'll set up a meeting. We'll go through this in depth. But yeah, to answer your question, the title search real quickly. Most title companies, mine included, if it's an outside county. So if you're dealing outside of Rutherford, Davidson, or Williamson County. So if you're in Maury County, if you're in Wilson, if you're in, some of these outside counties, most title companies will have an additional title search and exam fee on there. And the reason that we have that is because a lot of people don't know this, but the title premiums for those counties outside of Davidson, Williamson, and Rutherford are about 50% less. And so most title companies, in order to be able to do business, we have to charge an extra search and exam fee. And so you want to make sure that you include that if you're in an outside county as part of your seller pay or buyer pay, however you're negotiating that.
Thanks. I appreciate that.
Normally.
All right. And so, sorry, did you say something?
Sorry, I was just asking, what would that fee typically be then to do the title search? Is there a set rate or?
Well, every company is a little bit different, so I can't speak for every title company. My title company, we get it off of our calculator. We have a formula that gets it, that basically it brings up that premium to where it would be 80% of whatever the title would be in Davidson, Williamson, or Rutherford. So it's different. So on more expensive properties, that title search and exam fee is going to be more than it would be on less expensive properties. Usually it's around $250. But there is a formula, and if you want the exact numbers, you'll want to go on the calculator there and check that out. And again, if you have like specifics on a contract that you're negotiating, it's usually a lot easier, and you're going to get a lot more accurate information just by texting me, and I'll get you the exact numbers.
Okay, thank you.
And the only thing I need to know to get a quote for you is just the county the property's in, and then the sales price, and I can generate a quote for you. Section 7 is y'all's section. I'm not gonna spend any time there. That's your commission. Just make sure you check that, make sure it's right. Whenever you're looking at the ALTA, we want to make sure you get paid every penny that you have earned. Section 8 is the government charges. That's what Uncle Sam charges. And so that's collected there. Buyer pays that 99.99% of the time, recording fees and transfer tax in Tennessee. Section 9 is the payoff. If your seller has mortgage, credit card, judgments, anything that's got to get paid off in order for the real estate to be sold, that's where we put those things. So that cuts against the seller's proceeds. Section 10, this is actually an important section. This is the miscellaneous. So you want to check this out for sure. HOAs, if you've been doing this long enough to know, HOAs get their piece of the pie. They charge the seller a statement of account to get out of the neighborhood. And that's just something that they charge the title company to tell us that they don't have any liens. And so that gets charged back to the seller. They'll usually charge the buyer a transfer fee, a one-time fee to get into the HOA. Sometimes they'll also charge a working capital, which is just money that goes into the general fund for the HOA. That's usually a buyer charge as well. And sometimes they will charge advance dues, which is like if you're closing in January, they might collect February's HOA. That way you don't have anything to pay until March when the mortgage payment begins. I don't know if you guys have a team or brokerage fee for KW or for HHG, but if you have one, make sure that, Kara, whoever's working with our team, they let us know so we can get that included. Home warranty, whoever's paying that, we need an invoice there. So we're happy to put it on. Whoever you want us to pay it, buyer, seller, whoever, we just need an invoice so we know who to pay for the home warranty. And then if the taxes are behind, sometimes taxes get behind, and so the seller will have to pay those. So we put that in that section as well. And then the last thing is the homeowner's insurance. The lender is always going to require the first year of homeowner's insurance, the premium, to be paid at closing. And so usually like $1,200-$1,500, something like that, is going to be in this section to Allstate, State Farm, whoever their carrier is. And so we'll collect that, and then they'll also collect a few months in the escrow account. So the way your buyer can think of it is they're usually about 15 months ahead on homeowners insurance on the day they close. Okay. Does anybody have, that sort of wraps up that part of it. The last part is just kind of the balance due to and the balance due from. So if you're looking at a settlement statement, on the right-hand side is going to be the buyer side. On the left-hand side is going to be the seller side. If you're looking at it on the right-hand side, it's going to have a section that says balance due from at the very bottom. That is the cash to close. That is the number that your buyer has to have at closing in order to buy the house. And if it's over if it's over $1,000, we have to have either a cashier's check or a wire from them. So they'll want to work that out with their bank ahead of time. On the left-hand side is the seller side. It's the balance due to, and that is the net proceeds. That is what the seller will walk away from at the end of closing, after all the closing costs and all of the mortgage liens and everything else are paid off. And so, so that's pretty much everything on the ALTA. I know we went through that super quick. There's more that I didn't get to. So if anybody wants to set up an individual meeting, please do. Ashley, I sent you the PowerPoint, which has more slides. And on the very last slide, it's got my contact information with my cell phone. If you want to send that out to everybody on the call, that way they've got my cell. Just text or call me anytime. And if I don't answer, as Aaron can attest to, it's probably because I'm in a closing, and I'll call you back as soon as I get out.
I have a quick question.
Yes.
Is the wiring information something that we have?
That's a great question. What we do is we typically do not encourage realtors to send wiring instructions to your client. It's sort of a no-no because of all of the wire fraud that's going on right now.
Mm-hmm.
When my company so what we do is my company will send the buyer the wiring instructions directly. And the reason is because we have pretty advanced email encryption technology on our stuff. And And also it takes your liability away from you. So, what we typically do is we'll send you the ALTA, you review it. Everything looks good. You confirm with your buyer, hey, this is your cash to close. You get $77,000 or whatever. And then you'll let them know that we'll be sending them wiring instructions, and then we'll just need their email address so that we can send them the wiring instructions. But that'll come from my title company. You should never, as the real estate agent, this is just me giving you advice. I'm not telling you can't, but my advice is you should never send wiring instructions to your client, because if an email gets hacked, what happens is a lot of these hackers will monitor your emails between you and your clients. And when they know that closing is coming up, they will intercept emails and send fake emails. And you just really want to make sure that your client knows that they should never send money anywhere unless they have gotten the wiring instructions directly from the title company. Also, our title company wiring instructions have clear instructions on there for the client to call my office number to verify the account number that they're sending it to. We just don't want your client sending $100,000 to some bank overseas. Okay. Yeah. So that's sort of to answer your question is, I don't mind giving anybody my wiring instructions, but I like to make sure that the agents that I work with are not giving them directly to their clients, because it's a lot of liability on your end. And I want my title company, who is insured. We have cyber fraud insurance. We have really expensive encryption technology on our email. We need to be the ones sending the wiring instructions out to your clients.
Okay, that's perfect. So we would
Does that make sense?
Like, would it be just smart to just like tell them that they need to contact you guys, or you guys contact them? Sorry, I missed that.
We're usually going to contact them as part of our standard procedure. But if for some reason they have not heard from somebody on my staff, just shoot the processor who's working on the file, whether it's Nathan or Diana over at my office. Just say, hey, Nathan, the ALTA looks good. I reviewed it. Can you shoot the wiring instructions over? Here's my client's email address, or something like that. It's usually part of the process, but just in case, or if your client's like, hey, I haven't heard from Bell and Alexander, just shoot him a quick email. He'll get it out quickly, or Diana will get it out quickly. We only have 2 processors that work on y'all's files, Diana and Nathan, and they're both really, really good at what they do, and very easy to get a hold of, especially via email. So you'll get a quick response.
Erica, I do think there are a few email templates where Kara mentions a lot of these things to the clients throughout the process to point them back to the title company too. Okay. So it won't just be you helping the client follow the right process. I think Kara does some of this within the email templates as well.
Mm-hmm. Perfect.
Oh, did we lose him?
I'm back. Sorry.
Thank you so much, Ben, for coming by.
Thank you. Sorry about my internet. I'll try to do better next time.
No worries. Nolan and I are getting, what do you call it? Fiber. We get it.
Okay. All right. Well, y'all have a good one. And again, just reach out to me if anybody wants additional training.
Cool. Thanks so much,
Thanks, Ben.
See you guys
Thanks,
later.
y'all.
Thank
See
you.
ya.
Bye.
Bye, guys.
Bye, y'all.
Bye.
Are we all saying?
Hey, Ashley, I've got a question for you.
Oh, I won't go. Hold on. Let me stop this recording though.
Are we all saying bye?
No.